Hi everyone, welcome back to this week Weekly Market Update. As usual, let's take a look what is happening on the market itself and then let's recap what I have shared previously. A couple of things before I ended the video last 2 weeks ago. I mentioned a couple of things to watch out. Firstly, is actually on the gold side. Gold actually hit the slightly resistance by this descending triangle. As you can see, we are very close to 2000. So this is what I said last 2 weeks ago. Do take note. If you have not long when it bounce back, you are looking to short, do not short when you are near the support area. Current support area is always between 1900 to 1920. So when the market go to this near the resistance level, that is where we take actions on it, and then the market actually eventually came down, and then it was bounced back again by this strong support at 1900. So we will review the chart later as well. So hopefully you guys have take it as a pinch of salt. Do not short or do not long when it's actually at the high side, or do not short when it's actually at the low side. You're looking to sell it lower. Okay, so this is another counter we went through. It's NEO. Lucky to say, NEO didn't perform well. It didn't go up as what we predicted, but it never go to the stop loss level that we actually set in as well. So we are still holding on NEO at the moment, and then we'll review the chart later as well. So not only on that, there are other things which I mentioned in the video, but I just didn't chart it up. So if let's say you watch out on my video 2 weeks ago, you should know a couple of things actually has been panning out how it flow. One of the counter which I did mention is actually fought as well. We'll be looking into the fought counter later. All right. So last Friday we can see that market close rate down, dropped 300 point. S&P and Nasdaq both suffered the straight weeks of losses. Okay, so let's take a look what's happening to the market itself. Worst performing sector is actually the info technology. Adobe actually dropped 4%, and of course there's one new shares which IPO and then start trading on last Thursday, which is this ARM holding. Go and Google. I think it's a very big IPO, 52 billions or 51 billions market cap. Is very big. Thursday itself, of course, always the first day IPO, most of the time 80% to 90% actually go even higher. Eventually, I think the IPO price is around $51 or $55. It shoot up to $60+, and yesterday profit taking definitely will come in way, so that's why the market dropped 4.2%. All right, so is it a good time to go into ARM holding? On technical perspective, you can't see any chart right now. On fundamental wise, when it shoot up to $60+, the market cap, I think the value of this stock itself is more expensive than Nvidia. So is it good? I think there is no track record at this moment. So usually I don't play on after listing IPO shares, because we need more. Like I said, the stock market is the oceans. I'm just a small fish over here. All right, so I need more confirmation in order for me to kickstart whether to trade it or not. But at the moment, inside my watch list, we'll monitor it maybe after end of the year, whereby we got 3 months, see how the market flow. Okay, so I think market actually go even lower because 1,000 member of this United Auto Worker, they actually went on strike after failing to reach the deal with the automaker on Thursday night. So this strike causes the market panic or whatever, but it's just a very small thing. But the market drop may be due to still the main reason is actually the economy data like core PPI and also the core CPI. I think there's a mixture of the data itself on this inflation rate, whether for next week FOMC meeting, which is also a very important highlight for next week. There's a FOMC meeting, whether to increase the rate decisions or not. So do take note, if you are participating on the market itself, take note on next Wednesday, there's a Fed interest rate decisions. All right, this is time ET. Do take note which time frame are you at. All right, so actually nothing much on the market itself for last week. That's why I didn't really report or create a video, because we can see the market is quite stagnant, has been moving sideways. We'll review the chart and we'll go into the individual sector later on. So hang on, and then we'll take a look individually. Okay, next thing to highlight is actually the oil. If without you knowing, if you don't drive, if you don't trade commodities, oil has been creeping higher and higher. It's going to reach 100 soon. All right, and there is some analysts is actually expecting to reach 100 before 2024. All right, before 20, I mean, we left like last quarter of the years, 3 months more to go. I think most likely it might go there. Ultimate reason why is because the supply keep cutting the output of the supply. As you can see, the price rally come to the growth expectation, tighten the supply after Saudi and Russia move to draw down the global global inventory, and extend their oil output cut through the end of the year. All right, so commodity is really the supply and demand play, the usage play right now. If the supply has been cutting and cutting, definitely the price will shoot, right? But I mean, you will definitely say, if let's say I'm Saudi, I will definitely will cut because I'm the one that produce the oil, right? So, but there is always a line to maintain. There's always a line to maintain. So that is why OPEC, which is the one that actually, looking over this whole thing, maintain the outlook supply cut through the end of the year against the Asia positive demand backdrop. All right, so actually when Asia positive demand backdrop, we use lesser, so that's why they produce lesser. But what happens if let's say we want more and then they not enough to supply, not enough oil out there, the price will definitely shoot up, right? And that is why it causes a supply shortage. This is what they are trying to say. All right, and that is why the price can be continue to go up. Definitely, you will benefit who? Benefit the producer, right? So those like ExxonMobil, this kind of big company, right? They are very price sensitive as well to what the oil price at the moment. Of course, they do hedging everything, but it will still give them a good result. All right, so take note on the oil, but don't be over greedy. If let's say the oil have reached 100 120, don't long again. All right, it can be break, but it will not sustain. Okay, so we will look into oil later as well. So next thing is actually a China retail sales. Surprise, we know how Hang Seng China's has been performing badly. All right, so we will look at the chart later, but retail sales surprised with the faster growth in August. So we know that Chinese economy is not doing well, as there's many past data has been reporting, especially where there is this house issue, right? The there's one house issue. I think there's a news which I reported what country garden causing the property price to collapse, where they can't even pay the stock, the bond itself. All right, but this retail surprise actually covered by the property issue at this moment. So even though it beat the expectation, is way better, but with the property sector is not performing well, it seems like the whole Chinese or Hong Kong economy is being gloomed by them. All right, so they are being shadowed by this property issue at the point of time. I mean, guys can go and read more about it. Private sector investment drop, a couple of things. So on chart basis, we can see that they are still kind of at the downside because there is no rebound, even though with this news came out on Thursday, if I'm not wrong. All right, so we will review the chart and then we see how a couple of the counter is going as well. So this is one of the famous investor or trader or the founder Lan Ray. He said that he preferred to hold cash temporary, but I like one thing that he mentioned over here. That's why I just want to share with you. This is one thing that he shared. All right, so biggest mistake that most investors make is believing that market is perform well, all right, are good investment rather than more expensive. So market keep going up doesn't mean they are very good or the company is good. It can be due to like oil going up, might not be oil is getting expensive, or company is actually gain all this benefit. It's only temporary. It's not going to stay long. All right, some stocks they shoot up during the post-COVID or after the COVID. This is all news or economy play just nice at the point of time. But are they a good investment or they are very expensive as an investment itself? You have to gauge from that. It's either you use your own fundamental or your own TA to calculate on it. All right, of course, for intrinsic value is the FA wise, right? The fundamental to find out whether is it cheap to go in or not based on their the company reports, earnings reports. All right, so enough of all this. Let's go directly to the chart. Okay, so for this is Dow Jones. On last 2 weeks, I say no action between the price of 34,300 to 35,500. All right, short when it's near above, long when it's near bottom. Correct or not? So this is what I mentioned. For people who like to know why, basically there is one support over here. I dropped last week, but I think I didn't save the chart or I did remove away. Okay, this is why we do not short it because it have not break yet. Alright, so 2nd September is somewhere here. Okay, this is the area I'm saying. Okay, if you know, this is the area I'm saying. Okay, we only got here. Okay, so just to, for your more clarity, 1 second. Okay, so 2nd September is somewhere here. Okay, so you see, if you have shorted, alright, it's only short lifted. That means it's a 1 or 2 day and then you bounce back. Okay, so if you want to play on the safe side, you long because you know how to control your stop loss. Then congrats, you have right a few weeks. But Friday closing, surprisingly, it did not seems like it's going to sustain this support soon. But heavy break not yet. Heavy break not yet. Okay, so to be safe, there is 2 points to watch out for. Is first, you can either watch for it to break this ascending support level. Okay, it's showing a 1 point. Second, fulfilled the condition of breaking the 34,300 as second point. So after the candles forming like that, then we can see it's more on the downside. Of course, with some indicator bottom, then it gives you a confirmation here. So otherwise, at this point of time, is it going to come down? Not yet. Okay, it's not yet. So we don't forecast. We do it when the price action show us. Okay, at this moment, there is actually, I thought you will break up at the first point. Okay, based on chart, I thought you will break up at the first point on last Thursday. Alright, I thought, whoa, it's well resisted as well. I thought it's a breakout, but it seems like a force because it cover back again. So looking into the weekly chart, you can see that very clear cut. Alright, it's like a doji or like a hanging hammer, whatever candlestick that you call it, is still within the channel itself. Alright, still within the channel itself. So there is no clear cut breakup or breakdown. Alright, so as you can see, the market is very stagnant. It has been floating sideways. Alright, sideways all the way, go up and then sideways. So this is how many days since August, 35,000, 34,000, just floating sideways. So if you are short-term time frame, an hour or 4 hour, buy at the low, sell at the high. Basically, you get a couple of few rounds, sell at the high, buy at the low, buy at the low. This is the midpoint. Alright, so it depends what type of trader are you, swing or positions, you should know yourself. Okay, so same as usual, I will call it bearish. Right, so let me update as usual. So 16 September to the buyers downside if break both ascending support plus 34,300 support level. Watch out on price actions. Okay, this is how we catch it. So this whole thing, I'm going to put it more. Okay, this is what we will be monitoring for the coming weeks. All right, so that's my take for Dow. Otherwise, if you never break, market is either two-way, up or down, or it remains sideways, right? If it never break down these two things, I will continue to bias on the upside. All right, I will continue bias on the upside. Otherwise, if it never break, we will continue bias. So watch out. If you ask me, right now it's still 50-50, but it break the first line, then I will bias like 60% on the downside. Break the second line, 80 to 90% on the downside. So it's up to you. All right, so that is my view for Dow, and then let's take a look at a couple of stuff. Why I say market is being stagnant, and there's nothing really much for me to say on last week. As you can see, when you are trading on stock market on the indices, sometimes you have to monitor the whole sector. All right, I think there's 11 sector out there. This is like consumer discretionary, Can you see it's a sideway? It's not breaking. There's no trending. It's like sideway. This is the consumer staple. Can we see the market is moving sideways? If you realize, do you see it's a sideways market? So nothing much, but of course you can long at the bottom, sell at the high side. Okay, you can play within the channel itself if you want. So I mean, there's a lot more this energy. Energy sector actually spiked higher. Why? Because the oil price went higher. All right. So if you're right on it, then congratulations to you. Right now we are actually at the tip top. So is there any pullback? This will depends on the oil sector. So if you believe that oil is going to price 120 before the 2024, so you do not chase upon here. You can actually wait for some pullback and then you go in again. Okay, so this is how you play on the but do take note, this is ETF, so usually we don't do it day in day out, unless you just want to earn a few points itself. Otherwise we can do like a swing trade instead. All right, do like a swing trade. So what do I mean by swing trade for people out there who are not very familiar? So swing trade is that you waiting, this is a good support area. Once the price reach a bottom, you enter a buy and then you put a stop loss and then you hold it. So wait for the market to pan for a few days to weeks. Once you hit your target, take your profit and that's it. So it's not like intraday in and out. Okay, so this is more on the swing trade. Position will be slightly longer term. Okay, so depend on what kind of strategy or trader are you. So you can see the market is a sideways. I can zoom out, you can see the market is a sideways. So but take note, one thing is actually the utility. Utility seems like, I think it break down. Take a look. Alright, so right now it's actually trading below 200 days moving average, but utility wise really move very slow and it's very well supported by 200 days. As you can see, once it close below, it bounce back. All right, utility sector is very price sensitive to interest rate because usually they are the high debt instrument. So when interest rate keep going higher, it's not going to be healthy for them. All right, interest rate go over is actually healthy for the bank. So you can look at the economy on the financial side. So it's very stable upside all the way. But for utility, will be the vice versa stuff. Okay, so do take note on that. Okay, so this is the 11th sector I will do monitor sometimes. Where does it go? So next we will go into the gold and then we will see how it work out since we charted last 2 weeks ago. So for gold wise, can you see? Let's go to the day chart. So this is what I shared. Remember, this circle is the same as this Facebook which I post, right? So the goal, if you have shorted near here, you should have taken some profit. This is like a normal swing trade, a small minor one, because it is trading within the triangle that we actually draw, right, that we charted. So if the price went to low around 1921, which I said immediate support is these two price, right? If you are greedy, it's okay. Everyone is greedy, right? If you shorted here, if you are greedy here, you might not took your profit at this point of time. But if you are, partially taking your profit at this close to 1920, then at least you are half secured here. Another half wait for the big bonus, or you should shift your stop loss. How you going to manage yourself is what you have learned through your trading experience. All right, so like what I'm trying to say, gold, there will be a squeeze forming. All right, it's either upside or downside. It's played within this triangle. Like I said, break below 1920, 1990, we will see the loose of gold dropping heavily. So we shall see where will go bring us to. Okay, so let's go into the stocks that we mentioned. Just now I mentioned four. Okay, so this is what I mentioned previously. I remember because I dropped, right? So 2nd September, which is 2 weeks ago, watch out for the lower time frame for action price determine support at 11. I say that Ford is trading on the very sideways chart, all right, since April 2022. We can see well supported, and the price seems like it's going to not going to support it because everyone know. So everyone tend to go in early, alright. So the price didn't really go into 11, but which I shared on 2nd September is somewhere here. So the price actually went higher, okay. And then Friday itself, it gapped down, but it closed back. So if you have entered it, there definitely will be a dollar profit for you. It depends what kind of trader. But if you want to hold it, then hold it. But respect of your stop loss. Okay, for below 11, you should know what to do next. Okay, next, let's go into our US oil. US oil. Okay, US oil, I remember I said this is a support level, 62, 66. I was buyer downside where we are actually at this period. So we trade with the trend, right? So it broke the trend at this point of time, as you can see. All right, it broke the trend, the 50 days, the 200 days, and then the market even swing higher. Okay, you can see the market will swing higher. So like I say, this is similar to the ETF, which I mentioned, right? The fund sector of the energy part. So do not chase it. All right, if you want to trade, the first resistance level is at around 92, 93. Okay, so I'm going to write it down, and then we will monitor 16 September. Okay, first resistance 92, 93, which is going to hit soon by next week. Second resistance is 100, the round figure. All right, and that's what people is watching at. So do not chase the upside. Wait for pullback if you believe oil heading towards 100 before 2024. Okay, so this is what you should take note of. Looking at the weekly chart, it's a very bullish candle. All right, I don't see any sign of stopping. So I think most likely this part may hit before 204 may hit. All right, so we shall see how does oil work it out. This is what I said previously. Break below, not a good sign. Well supported is the other sign, right? So it's only up or down. So it's how you manage your resistance. How you manage your profit and risk. All right, risk reward. So let's take a look at a couple of stuff. Okay, next counter. Just to recap, I remember I said this many weeks or many months ago. I mentioned on 25th June. Okay, do not enter charge point again. I know a lot of people like EV, you like to go into a subsidiary like charge point. Do not enter charge point again due to the business affected by Tesla. All right, that is where I give you guys the biggest warning sign. I was actually biased on the upside, if you realize, okay, if you I'd be bullish, right, due to divergence or whatever. But since the news came out, they are actually fighting on the business, the fundamental change. It's not going to bring them any more profit, and that is why the market has been going lower, or the share price has been dropping crazily. All right, so I said on 25th June is here. All right, it's here, this tip point. You may say that, oh, I sold here and the market bounced back. You may be crude, screaming at me, scolding at me. But if you are looking for long-term investment or position swing, it's not the bounce. That's why you could have hated me previously, but you could have thanked me currently. All right, so it depends on how you look at it. So that's why long-term wise, better look at fundamental and the structure, the company structure. How does it perform? Okay, so 16 Sep recap. Do not hold okay, so this is what we recap as per today. All right, so hated me, thanks me. Okay, so next counter we will be looking into will be one last counter. I think we talked very long today. Okay, it's NEO. All right, so this is what I mentioned, right? NEO, there is 3 reasons why I say it's on the upside. Go and see back if you never. So right now the price has been well supported by 200 days moving average, this pink color, all right, this pink color line, 200 day moving average on the daily chart. So as long as the price is not breached below it, so we are still buyers on the upside. It depends how the market sentiment take it with the good China economy that reported this retail. All right, hopefully there will be, you know, the white knight, which is the government will step in to save the property sector, and it may concurrently lift this whole thing up again. All right, but we know that Chinese has been cutting their rate while US is increasing their rate. So while cut rate is actually, uh, you know, it's a good stuff for the economy. Especially there's one thing I think they reduce the 25 basis point of the cash that the bank need to hold. What does it mean? Mean that the bank can actually take more money to rent people to do business, right? Which is a good thing. It was the second reserve requirements ratio cut this year and since the one in March. Okay, this is how the government play on this policy itself by reducing the basis, give more chances for the bank to make more money by lending out the money for people to use business. Okay, so hopefully it will save Chinese economy, and then resulted NEO will actually go up based on these three technical support evidence. All right, so that's all for this week mini market update. I will see you guys next week again if there is movement. Otherwise, do take note, watch out on the coming news is the interest rate decision. Will there be any surprise above 25 basis point? This is what the market is going to predict. But suddenly 50 basis points come in. How should you react on your portfolio? Do take note. All right, that's all. Enjoy your week. Bye bye.